Day 10, EUR USD Strategy 1, from open profit to a controlled 8-pip loss. Opening, welcome back to our EUR USD Trading Challenge. Today is day 10, and once again we are testing strategy number 1 on the 10-minute chart during the London trading window. This session reminds us that a trade can move strongly in our favor and still finish as a loss. Our short position reaches approximately 16 to 17 pips of open profit, coming very close to the 20-pip level required to move the stop loss to break even. But the market reverses before reaching that milestone. The bearish momentum disappears, buyers take control, and the position eventually closes at the end of the trading window with a controlled loss of 8 pips. It is not the result we wanted, but the strategy was followed correctly from beginning to end. Let's begin. Stage 1, preparation. Before starting the market replay, we prepare 2 order templates. One template is for a long position and the second is for a short position. Creating these orders in advance allows us to clone and place them quickly once the reference point has been marked. Each position uses a 40-pip take profit target. The templates may initially show a smaller stop loss, but before placing the orders, both stop losses are adjusted to the strategy's required 20 pips. This gives us a potential 2-to-1 reward to risk structure. We are prepared to risk 20 pips for the opportunity to capture 40 pips. The complete strategy rules are straightforward. First, mark the current market price as the reference point. Next, place a pending buy order 10 pips above the reference price. Then place a pending sell order 10 pips below it. Both orders receive a 20-pip stop loss and a 40-pip take profit target. When one order activates, the opposite pending order must be canceled immediately. We only trade the direction selected by the market. The strategy also includes an important protection rule. Once the active position reaches 20 pips of open profit, the stop loss must be moved to the entry price. This protects the trade at break even, while still allowing it to continue toward the full 40-pip target. However, the position must actually reach 20 pips. We cannot move the stop early simply because the trade is showing profit. Every decision must follow the strategy, not emotion. The templates are ready, the risk is defined, and day 10 can begin. Stage 2, creating the setup. At exactly 12 midnight London time, we draw a vertical line to mark the beginning of the trading window. A horizontal line is then placed at the current EUR/USD market price. This becomes our official reference point. Using the prepared templates, we place both pending orders. The buy order is positioned 10 pips above the reference level. The sell order is positioned 10 pips below it. We confirm that both positions have a 20-pip stop loss and a 40-pip take profit target. Everything is now in place. If strong buying pressure develops, the long order will activate. If strong selling pressure develops, the short order will activate. Until then, we wait. There is no need to chase the market. There is no need to predict the next candle, and there is no reason to enter early. The market must reach one of our predefined levels. For several hours, EUR/USD remains between the 2 pending orders. Price moves above and below the reference area, but neither side produces a confirmed breakout. The market appears undecided. This waiting period may feel uneventful, but patience is an important part of trading. A valid opportunity cannot be forced. Our responsibility is simply to remain prepared. Stage 3. The short trade activates at approximately 6:50 a.m. The market finally makes its decision. Selling pressure increases, and price moves downward toward our pending sell level. The short order is activated. The market has selected the bearish direction. Immediately, we cancel the pending buy order. There is now only one active position. The stop loss is positioned 20 pips above the short entry. The take profit target remains 40 pips below it. During the first few candles, price begins moving in our favor. The bearish momentum continues, and the short position starts building open profit. 5 pips, 10 pips. Then the market pushes even lower. The trade is developing well, and the 20-pip break-even level begins to move within reach. Eventually, the position reaches approximately 16 to 17 pips of open profit. We are now extremely close to the protection point. Only a few more pips are needed before the stop loss can be moved to break even. But the rule is clear. The stop moves at plus 20 pips, not at 15, not at 17, and not simply because we are afraid of losing the open profit. The market has not reached the required level, so the original stop loss must remain in place. Changing the rule in the middle of the trade would create inconsistency. Therefore, we remain patient and give the market enough space to continue moving toward the target. Stage 4. Momentum begins to fade. After the strong bearish move, price begins to slow down. The market stops making consistent progress toward the take-profit target. Instead, EUR/USD begins consolidating. The candles move upward and downward inside a narrow area. The short position remains profitable, but the 20-pip milestone is still out of reach. This is a difficult stage psychologically. The trade has already moved significantly in the correct direction. It came very close to activating break-even protection. But close is not enough. Some traders might close the position early to secure a smaller profit. Others might move the stop loss to break even before the strategy allows it. But strategy number 1 requires consistency. We do not change the rules simply because the market is making us uncomfortable. The stop loss remains in its original location. The take profit target remains active, and we continue observing the position without emotional interference. As the session moves forward, the market begins to change direction. The bearish momentum disappears, and buyers gradually start returning. At first, the upward movement looks like a normal retracement. The position remains in profit, and sellers may still regain control. But the bullish candles begin becoming stronger. Price moves closer to the short entry. The open profit begins to disappear. The trade that was previously close to 17 pips in profit is now moving back toward break-even. This is frustrating, but the strategy's condition was never completed. The market did not reach plus 20 pips. Therefore, the stop loss was not moved. We must accept the situation exactly as it develops. We do not pretend that the trade reached the required level. We do not change the rules after the event. And we do not make an unplanned decision simply because we want to avoid a losing result. Stage 5, the reversal. The bullish reversal continues. Price returns to the short entry level, removing the remaining open profit. The position then begins moving into a small loss. This is where emotional pressure becomes strongest. After watching the trade move 16 or 17 pips in our favor, seeing it turn negative is uncomfortable. But professional trading is not about reacting to discomfort. It is about respecting the plan and controlling risk. The position remains inside the original 20-pip stop loss. There is still time remaining before the trading window closes. The market could potentially reverse again. Therefore, we allow the trade to continue according to the strategy. We do not widen the stop loss. We do not add another position. We do not attempt to recover the disappearing profit. And we do not allow frustration to take control. The risk was defined before the trade opened. That risk must now be respected. Stage 6. Closing the position. As the session approaches 7 p.m., buyers remain in control. The short position continues showing a controlled loss. The full 20-pip stop loss has not been reached. However, strategy number 1 requires all active positions to be closed when the trading window ends. At exactly 7 p.m. London time, the session is complete. We do not keep the position open hoping for a later reversal. We do not extend the trading window because the result is currently negative. And we do not ignore the rules simply because we want a better exit. The short position is closed. Trade number 1 finishes with a loss of approximately 8 pips. Because the position remained open until the end of the trading window, no second setup is created. Day 10 is complete. Final result. Now let's calculate the final result. The account began the session with a balance of €1,069. The trade closed with a loss of 8 pips. Using the position value shown in the trading record, the financial loss was approximately €25.76. The ending account balance was therefore approximately 1,043. The final summary is trade number 1, minus 8 pips. Trade number 2, no trade. Total result, minus 8 pips. Daily loss, approximately €25.76. Ending balance, approximately 1,043. Closing commentary. Today's session ended in a loss, but it was a controlled and managed loss. The trade moved strongly in our favor and came close to reaching the 20-pip break-even milestone. However, the market reversed before completing the requirement. The bearish momentum disappeared. Buyers returned, and the position was closed at the end of the official trading window. Most importantly, we followed the plan. We did not move the stop loss without confirmation. We did not increase the risk. We did not force another trade. And we did not keep the position open outside the permitted session. This is an essential part of the trading journey. Not every valid setup becomes a winning trade. Not every position that moves into profit reaches the full target. And not every session increases the account balance. Losses are part of trading. The objective is not to avoid every losing day. The objective is to keep every loss planned, controlled, and emotionally manageable. Day 10 is now complete. One short trade, a maximum open profit of approximately 16 to 17 pips, a late bullish reversal, and a final result of minus 8 pips. The account remains protected. The strategy remains unchanged. And we move forward to the next trading session with discipline, patience, and confidence. This video is presented for educational and entertainment purposes only. Forex trading involves substantial financial risk, and past performance does not guarantee future results.